Imagine a version of your life where you look back and say, everything changed the moment I decided to stop ignoring opportunities. A version of your life where you didn't wait for luck. You didn't wait for someone to help you. You didn't wait for a miracle. You took the first step yourself. Not a huge step, not a risky step, just a small step in a new direction. A step that eventually shaped your entire future. Most people never experience that version of life. Not because they lack ability, but because they never explore the possibilities sitting right in front of them. They underestimate small beginnings. They ignore early opportunities. They think everything meaningful must start big. But real growth often begins in the shadows, quietly, patiently, before the world even notices. That is exactly how the financial world works. Almost every major company that dominates today's market started at the bottom. They began small, unstable, uncertain, and slowly rose through time because a few people believed in their direction. Long before the rest of the world caught on, this is the mindset behind exploring stocks under $1. It's not about chasing hype. It's not about gambling. It's not about expecting overnight money. It's about training your mind to recognize potential before it becomes obvious. Learning how to analyze companies when they're small teaches you a skill that stays with you forever. The ability to see where something could go instead of only seeing where it is today. Before we go deeper, everything here is for education only. Nothing in this video is advice. Nothing is a promise. Nothing guarantees results. Low-priced stocks carry risk, and they can rise or fall extremely fast. Always research. Always make your own decisions. And never risk money you cannot afford to lose. Now, let's continue. When beginners see a stock worth 50 cents, they only see the number. They see a tiny price and immediately assume it means tiny potential. Or worse, they jump in thinking it's a shortcut to fast profits. But the truth is more complex. A low stock price doesn't automatically mean opportunity, but it doesn't automatically mean failure either. It simply means you need to look deeper. A stock under $1 can be underpriced for many reasons. It might be early in development. It might be restructuring. It might have gone through a rough year and is trying to recover. Or it might be entering a new market and still building momentum. And this is where your mindset comes in. Because these companies do not reward people who react emotionally. They reward people who think logically. People who study, observe, and understand. You need to see low-price stocks the same way you would see a young tree. At first, it looks fragile, small, unimpressive. But every strong tree looked like that in the beginning. If you judge it only by its size today, you will miss what it might become tomorrow. But if you study its roots, its direction, its environment, then you begin to see its future. Now, let's explore 5 real low-price stocks under $1. Not as recommendations, but as examples you can study to understand how analysts approach these companies. I will expand each one so you get deeper insight into how to think like a researcher. 1. Syntex Technologies. This company develops advanced materials used across different types of industries. It trades under $1. And what makes it interesting from a research perspective is its focus on innovation in material science. People who study this stock look at things like how the company improves its products, whether it is forming new partnerships, how effectively it manages its operations, whether it is expanding into new sectors. A stock like this teaches you to look at progress instead of price, to understand how innovation can influence long-term potential, and to recognize that small companies often rely heavily on momentum and execution. Point 2. Mark Remark Holdings. This company creates digital tools and technology platforms. It sits under $1, but that doesn't tell you anything by itself. What matters is how the company evolves. Analysts look at updates to its digital platforms, expansion into new markets, progress in delivering new features, announcements that increase demand for its services. Studying Mark teaches a powerful lesson about tech companies. Technology alone isn't enough. Execution, updates, and functionality are what create true value. Point 3. FCEL Fuel Cell Energy. This company operates in the clean energy sector, which is a rapidly expanding field worldwide. FCEL often trades under $1, attracting attention from people who study energy-focused companies. Researchers track things like new energy projects, collaborations, and partnerships. Long-term strategies, the company's ability to stay competitive. Clean energy is a long game. Companies in this space require patience and vision from their observers. The lesson here is that long-term potential must be weighed against practical execution. This company has shifted directions over time and is now adapting its focus toward new development strategies. It trades under $1, and analysts focusing on it track how well the company restructures, announcements about new strategic directions, improvements in operations, signs of renewed growth. Some companies go through transition phases. Studying cases like a CRS teaches you how to evaluate whether a company is improving or struggling to adapt. 5. HUBC Hub Cybersecurity. This is a digital security company that also trades under $1. With cyber threats increasing worldwide, companies in this space attract interest from researchers who track platform improvements, market demand for security tools, partnerships that strengthen credibility. flexibility, updates that expand functionality. The lesson here is simple. Demand in a growing field doesn't guarantee success. Adoption does. That's why analysts look for actual progress, not promises. Now let's go even deeper into something that matters far more than the stocks themselves, the psychology behind studying low-priced companies. When you explore these types of stocks, you enter a world where prices can rise and fall faster than you expect. This environment tests your emotions. It tests your patience. It tests your discipline. And that's where real growth happens. Because if you learn how to stay calm while observing high-volatility companies, you will become far more confident when analyzing larger, more stable companies. If you learn not to chase sudden jumps, you will avoid making expensive mistakes in the future. And if you learn to research instead of react, you will develop habits that protect you in the long run. Most people chase excitement. They look for quick results. But excitement is dangerous. It blinds you. It pushes you into decisions you didn't think through. True progress comes from understanding, not excitement. From patience, not impulsiveness. You must remember something essential. Your biggest advantage is not your money. Your biggest advantage is your mindset. When you approach low-price stocks, you should focus on studying announcements, tracking progress, watching for real improvements, understanding the company's direction. Learning how markets react. This process teaches you more than any book or lesson. It teaches you through real-world examples. And these lessons stay with you when you eventually move to larger investments. And here's the part that matters more than anything. Your life does not change when a stock moves. Your life changes when your thinking moves. When you finally understand how opportunity works, you begin to see it everywhere. You start making better decisions. You start noticing patterns. You start understanding the rhythm of the market. And eventually, you realize that your financial journey was never about luck. It was about awareness. That's why studying stocks under $1 can be so transformative. Not because of the price, but because of the perspective. You learn how to see potential where others see nothing. You learn how to analyze before others notice. And you learn how to hold your emotions steady in a world full of noise. This is how people build strong financial futures. Not through hope, but through understanding. Not through shortcuts, but through preparation. Not through luck, but through discipline. So, as you move forward, remember this. Small numbers on a screen don't define your future. Your mindset does. Your patience does. Your ability to learn does. Every big journey begins with a small step. And studying low-priced stocks is one of those steps. A step that sharpens your vision, strengthens your discipline, and prepares you for bigger opportunities ahead. Thank you for watching. Tell me what topic you want next, and I'll create another deep breakdown just for you.